We have to put it all together, gang. We have to. We see this black Marubozo candlestick. We see the black candlestick March 18th after price went from March 16th all the way back up to March 16th from 1900, a psychological level, all the way back up to 1950. Our other psychological level, we see what? We see a black Marubozo candlestick, a bearish engulfing pattern. Black candlestick is engulfing this yellow candlestick. This lets us know that we are in a downtrend, right? And you could have rolled this from 1945, 1950, all the way back down to 1918. Even from 1925, even from 1935, around here, you could have rolled it all the way back down to 1918 and been in profit, making a couple hundred, couple thousand, depending on your lot size. So let's go back. I really want to break this down a little bit more. You can see right here, boom, price is what? What is price doing right now? As you can see, price right now is, in a downtrend on the 2 hour. This is what I wanted to show you. March 16th, we see what? This hammer pattern, even star pattern. We see black candlestick. Then we see what? Star, and then yellow candlestick. We see a yellow bullish engulfing pattern, bullish pattern, a yellow bullish pattern, yellow candlestick, long yellow candlestick. Lets us know that buyers are now pushing price back up. We see a hammer pattern. Let us know that sellers tried to push price back down, all the way back down. It did break below 1900 and went all and pushed back down to 1895. But we see what buyers push price back up, making a hammer pattern. This candlestick is hammering out at the bottom. This is why it's extremely important to understand candlestick patterns. This is why we went over candlestick patterns. I have a whole playlist on candlestick patterns. Make sure you check it out as well if you don't really understand candlestick patterns. This is a morning star pattern, yellow, black candlestick star, yellow candlestick. This is a Morningstar pattern. Let us know, boom, we're in an uptrend, and what does price do? Go all the way up to 1950. Right back to our next psychological level, 1950. Right, boom. So you have to pay attention. You could have brought this. You could have brought this from 1900 all the way up to 1950 once price got to our psychological level. Right. So you have to be extremely. You have to really understand what price is doing. You have to understand candlestick patterns. Like this is a hammer pattern, a morning star pattern. You have to understand that. We see the yellow candlestick break above this moving average. Once price breaks above this moving average, we could have got in for a what? A long position. You could have got in for a long position once price started heading back up above our psychological level, 1900. But if you wanted to be more conservative and waited, you could have waited for price to get above this moving average right here, right? And and once price broke above this moving average, you could have rolled this to the next psychological level, which is 1950. Price gets right to 1950. Boom. It starts what? Starts to head back down. Boom. You could have got out. Boom. And this is a 1.65 risk reward ratio. If you wanted to be a little bit more, a more, if you wanted to be, if you wanted to be more, if you want to be more aggressive, obviously you could have gotten a little bit more around 1911. Once you see price starting to, break back up, you could have gotten around 1911. And this is a what 6.47 risk reward ratio, right to 1950, which is about 50 pips. If we go to the 1 hour as well, we could see it more like more structured. What's going on more? What we see, a yellow candlestick. We see another yellow candlestick right here on the 1 hour. Boom, and you could have got in. You see You see this yellow candlestick break above this moving average crossover right here. Boom, it breaks above it. Once price breaks above it, boom, you could have got in right around here, 1919. Could have got in at what 1911 right here. It's still 6.47 risk reward ratio, and you could have rolled this all the way up to 1950. Boom, got out the trade. So you want to put it all together, gang. See yellow candlesticks, see a hammer pattern, boom, this hammer pattern. Once we've seen this hammer pattern, wait for price to get to our psychological levels. That's why it's extremely important to have your psychological levels on here. Ours is at 1900, 1950, 2000, 2050, right? It got to our psychological level. Boom. Then once price, we've seen price to not want to break above this psychological level. I mean, you want to break below the psychological level, continue this downtrend. This lets us know that we are what? Heading back up. We see this hammer pattern. You could have waited for price to make a hammer. Once price makes a hammer, it heads back down a little bit, retests back down a little bit to 1912, and you could have got in around here, 1911, 1912, and rolled this all the way back up. It breaks above this moving average crossover. We see a moving average crossover here. It breaks above this moving average, and what we see, what yellow candlesticks are above this moving average, letting us know that we're going up. We see a long yellow candlestick. When we see a long yellow candlestick, what does this mean? This lets us know that buyers are in complete control. And what do we see? Boom, it breaks structure. See this lower low right here? Boom, price was in the lower low. You see, once price breaks this trend line, boom, you could have seen this trend line from here to here. Boom, price breaks this trend line right here. Once price breaks this trend line, it confirms it breaks this lower low, this last lower high right here before it made a lower low all the way down to 1900. Price did make a lower high back up to 1927 before going back down to 1900. And once price goes back down to 19, breaks above this lower high right here, this lower high right here, this is a lower high. This is right here, it's a lower high. Just L high right here, boom. Once price breaks above this lower high right here, this last lower high right here, before making a lower low right here. Once price, starts to head back up and breaks above this lower high, because price does break above this lower high, creating a higher high. Makes a higher high right here. Boom. HH, higher high. Boom. Once price, breaks above this lower high, letting us know that this downtrend is completed. We are now in an uptrend, so it breaks structure, breaks this trend line, boom, we see what a yellow candlestick breaks this trend line, boom, you could have entered and could have rolled this all the way up to 1950. Gang. So extremely important to understand. I hope that makes sense, I hope that makes sense, gang. Show you on the 4-hour as well. As you can see, where it's in a downtrend. Once price, it breaks above this lower low. It makes a lower high right here. Boom, last lower high right here, back up here to 1927 before making a lower low all the way down to 1900. Then you see this bullish engulfing pattern. Yellow candlestick engulfing this black candlestick, breaks this trend line. Boom. This trend line is no longer valid. Boom, breaks this trend line right here. Boom. This trend line is no longer valid. Boom. Breaks this lower high right here, making a higher high above that. And then, the next 4-hour candlesticks, this is all from March 16th to March 17th. And we see price go all the way up to our psychological level, 1950. So extremely important to understand. And, boom, gang. I hope that really helps, So that's my advice on that trade right there. That's how you could have got in for buys. Wait for price to make a lower wait for price to get down to our psychological level. Boom, you can see this bullish engulfing pattern, this yellow candlestick engulfing this black candlestick, and price goes back up to 1950, if we would scale down, we would have scaled into a 2-hour time frame or 1-hour time frame. Obviously, price heads all, we see more structure. We see a Morningstar pattern, bullish engulfing pattern, yellow candlestick engulfing this black candlestick, and we could have gotten for an entry around here. So we go to the 1-hour as well. So I hope that helps. In our next video, I'm gonna break down what you could have did, because you could have rolled this from 1950 all the way back down to 1918. I'll break that down as well, gang. So I hope that helps. You can see on the 1-hour as well, price did get all the way down once price made a lower low. Boom, broke structure, breaking this lower high right here, and breaking a higher high. Wait for price to make a retest, makes a lower high. Once price makes a higher high, it'll make a higher low, makes a higher low back down to 1921 after making a higher high, all the way up from 1900. Boom, all the way up to 1929. It makes a higher low back down to 1921 before finally making a higher high all the way up to 1950, our next psychological level. Boom, gain. You could have rolled this all the way up to 1950. All right, gain.